Good morning, this is Ian and this is your weekly market update video. It is the 15th of August 2025. It's 7:30 in the morning in the UK. Interesting week. We saw lower or as expected inflation figures from the CPI excuse me, earlier on this week. Gave stock indices a boost. Also saw quite an aggressive move to the downside in DXY, which is the dollar index. This is on expectations, or actually we were looking at an 80% chance of a September rate cut before those figures, and that increased to a 90% chance. So we did see a move to the downside. However, got some sort of quite over the top PPI figures yesterday, and that can be also a gauge of inflation, and then we saw this reversal in the DXY, and we've ended up with quite choppy mixed and volatile price action. One thing that has happened is that we've seen the US 30, which is the Dow Jones, that is now trading at all-time highs. We're going to look at that this morning. We're also going to look at US crude oil. I've had an interesting setup, a buy setup in that product now. We have seen quite a sustained move to the downside in US oil over the last 2 weeks. I think we had I think it was 9 or 10 days of net losses, and that stalled yesterday. We actually saw a breakout of an ending wedge pattern. As far as the catalyst is concerned, maybe the markets are a little bit worried about the talks that are obviously going to be going on between Trump, Putin and Zelensky over the next couple of days. Obviously the US oil had moved lower on the expectations that these talks were going to be quite good, and that supply would then increase, and that obviously brings the price of oil down. What we're seeing is at least a correction to the upside in oil, and I think that might be sustained. So what we have in front of us are the trading view charts. So we've got, let's get rid of these. We've got the monthly, the weekly, the daily, 8 hour, 4 hour and hourly. So obviously the bigger picture analysis is the higher time frames, and then we're looking into shorter time frames for possible trading opportunities. My thesis or my objective is to look for wave patterns. I like to grab second waves if possible. I also like to see the completion of Elliott Wave formations, and that is where I focus most of my studies. So most of the time I'm quite aware of possible corrections in the markets. I'm also aware of exhaustion areas, and basically just trying to trade with the trend. So trying to grab a second wave and then run up to a fifth wave, and hopefully that will become a little bit clearer when we look at the charts, especially when we look at US oil this morning. Excuse me. So US 30, what can we say about this aggressive move to the upside? So this is the monthly chart. Just got a simple moving average on this chart at the moment, so virtually a naked chart, and we can see that we had this aggressive dip buying in April, and then although we saw some initial losses earlier on this month, buyers have re-emerged and we continue to move to the upside. So obviously in July we saw that correction lower, that was towards sort of the previous swing high, or the previous swing high barrier, if you like, got tested 3 times. But this dip has been bought into. Now we must remember that the US have been, or the globe really, excuse me, have been concerned about inflationary pressures with regards to Trump's tariffs. Obviously, that CPI figure on Wednesday or Tuesday relieved the markets and allowed for this upside continuation to continue. Also, talking about risk assets, cryptocurrencies, which I've been looking at a bit lately, Ethereum especially has seen quite an aggressive move to the upside. So this chart is the one that I want to concentrate on. So this is a 4-hour chart, really just based on Elliott Wave formation. So we've broken out the channel formation to the upside. This was the impulsive move higher. We've got an inside wave pattern as far as I'm concerned. So the major wave 1 is here, then down in 2, corrects lower, up in 3, 161.8% at 45,251, and then possibility for a correction lower over the next couple of days, and then a push back up. What's going to be the catalyst? Well, again, is the market going to be in wait and see mode with regards to these talks? If that is the case, then we could just see a mild period of consolidation. I've made note of these two levels here, so 45,146 and 45,059. They were resistance levels, so they now become support. So try and catch this fourth wave to the downside. However, I don't have a support level until 44,584, so it could be sustained, okay, as long as the top of this level, and if we put the pivot on, we'll be able to see what it is, 44,519. As long as that is not breached, then this large bullish Elliott Wave count remains intact. What I'd normally do here is look for sort of small reversal candles, bearish outside candles on maybe an hourly or a 4-hour chart, just to confirm that we are in a corrective mode to the downside. So really expecting a period of consolidation today, possibly Monday and Tuesday, but with the long-term picture being bullish. Let's have a look at oil. So we had this move to the downside, so quite aggressive. 1, 2, 3, 4, 5, 6, 7, and then a mild bullish day in between, and then 8, 9. It goes out of sync. There is actually a technical analysis rule. Doesn't always work as with most technical analysis rules, but there is a rule of 9 that basically says that if you see 9 consecutive daily losses or hourly losses in succession, then you should at least see a correction to the upside. It's called a break of formation, but obviously that didn't happen here. But what we have seen, what have we seen on the daily chart, and this is where I like to take a lot of my focus, excuse me, we've seen a morning doji star formation, or might not be a doji, but a morning star formation, shall we say, and that is often seen at the bottom of a trend and the start of a new upward bias. And often, actually, if we go to sort of higher time frames, often when we see a morning doji star, we'll see an engulfing pattern on a higher time frame, so maybe sort of the weekly chart, etc. In this scenario, but we are starting to see a move to the upside, and this is quite interesting for me. So I'll just get rid of the pivots again. Just find them a little bit annoying on black charts. Caught this yesterday. Angels and outside bars. So that's my mantra, if you like. Ending wedge pattern. Okay. Broke out quite aggressively. Came back, retouched. And then if we look at shorter time frames, so 4-hour chart, I think it was a 3-hour candle as well, we posted bullish outside candles, and they to me are either a confirmation of a change in sentiment or a confirmation that the trend is continuing. Okay, tried to move lower, stalled, broke formation. When I say broke formation, broke this swing high from wave one, and then we've pushed to the upside. I managed to get in at 62.57. Original stop placed under here. I haven't moved it yet. I actually like to see sort of a break of the third wave before I get my stop loss into entry. My target levels, well, minimum target is here, 63.70, but I'm not actually looking at taking that. I've got a 261.8% extension level at 64.14, and then I've got my resistance level at 64.30, so offered me a risk reward factor of 2.58. Where does the formation get broken? Well, the formation now gets broken on a move through this swing low, so I'm virtually at stop at entry now for a move back higher. Now, from little pictures we can get big pictures. Okay, if we get a move up to this level, then we can move up to a higher time frame chart. Okay, and I've annotated it here. So this is the wedge breakout. Okay, this is the first barrier, actually 62.14, but sorry, 64.30, but we'll take that. And then we can start plotting things out. Okay, this is quite aggressive and impulsive to the downside. That should mean that the move higher is corrective. I'm going to talk about cipher pattern formations here. So if we get a move up to this level, and then it completes that 261.8% extension, it's completed the wedge target, which is down here, then there'll be probably a lot of profit taking. There'll be some of mine, that's for sure. And then we can see a correction to the downside before the impulsive move higher. Okay, and just talking about Elliott Wave formations and back patterns. Okay, this sort of combines in, and the reason why I especially like this pattern is that it touches all of my sort of bespoke levels. Okay, so I've got this bespoke level here expected to be broken, and then the retouch being the fourth wave, and then the move higher going up to the main bespoke resistance level, which is at 68.94. Prime support is probably going to be 62.31. So, you know, a bit of a disjointed head and shoulders pattern. So coming lower, left shoulder, swing low, takes out stop losses, is known as the head, moves up to form the neckline, then moves down just to wash out a few early longs, if you like, and then forms wave 2, and then a move to the upside. So in wave 2 in this short-term cycle, and then hopefully get into wave 2 for this long-term cycle to the upside. Let's have a look at gold. Fascination with gold, not personally, the markets, especially newbies, especially the retail marketplace in general. I have no idea why, when there's so many different products to look at. A lot of the time it's range bound, and it's a difficult product to use. Correlation, news, risk on, risk off, DXY, which is the dollar index, all of these influence it, and 10-year, which is interest rate futures. So you've got all of these different factors that combine into the price of one product, and it can be very difficult, not just to analyse, but also difficult to trade. Right. Saying that, let's have a look at gold. So 5 waves to the upside, wave 1, wave 2, 3, 4, 5, completed an Elliott Wave formation. We can actually, Elliott Wave is common for it to finish with a wedge pattern. So we finished with this sort of inside wedge, broke to the downside, measured move target, which is the start of the wedge, was quickly achieved, blah de blah de blah. Okay, and now we're forming this pattern. So what normally happens after 5 waves? Well, after 5 waves to the upside, we'll normally get a corrective 3 wave move to the downside. It's quite essential that you not stick to the rules, but sort of know what the rules are. And the rules for trend lines are that they'll normally be touched 3 times and broken on 4. Okay, that's something that learned a long time ago from the Society of Technical Analysts. So here we've got wave 1, or we've touched 1, touched 2, we haven't touched 3. On the upside, we've touched 1, touched 2, we haven't touched 3. Okay, there's resistance at 3,358, there's support at 3,310. I would expect both of these levels to act as support or resistance. Let's just get this tool. So where I think the path is going to go is either like this. We need to change this. Settings. Make it yellow. Okay, so sometimes the path is not clear. So we could quite easily go up to touch 3 times, come down to touch 3 times, and then break to the upside, with the measured move target being 3,405. Or just as easily we could go down to 3,310, up to test the trend line 3 times, down, make a lower, higher low, and then break up to the upside. That would actually be my preferred stance, and the reason why that would be my preferred stance is because I would probably get an Elliott Wave formation out of it, and that's not one of them. It's just so fibs to something like this. Something like that. Okay, so we'd come down, hit the base, move up in 1, down in 2, up in 3, down in 4 would probably be the retest of the breakout level. So trend lines have a tendency to be retested, especially wedges. So 4th wave being the retest, and then a 5th wave impulsive move up to 3,405 to complete the pattern. If this happens, we then have to sort of reanalyze the markets basically, and see what's going on at that point. Aussie dollar. Okay, risk off. So we talked about Dow Jones, US 30. We've talked about gold sort of consolidating, probably going to continue to consolidate in that wedge formation. What has a tendency to happen is that when we see stock indices move to the downside, then we see commodity-based currencies especially being sold off, and a run to safe haven. So we've got that US 30 at quite a critical level at the moment, that 161.8% extension. So that could highlight that we see a correction to the downside in the Aussie against the US dollar. So on the 4-hour chart, impulsive moves are normally in 5 waves, so we completed that at this 0.6419 swing low. We then have seen a correction to the upside. Upside wave patterns are normally in 3 or 5 wave patterns. So here we can see 1, 2, 3, 1, 2, 3, 1, 2, 3, completed the correction at the 0.6569 swing high. We've broken out of this wedge formation to the downside. I've got resistance very close to here at 0.6511. What I don't have to the downside, I've got a measured move target for the wedge, which is 0.6419. What I don't have is a decent wave pattern. I think what we could probably see is maybe a steeper correction into this sort of zone, 0.6540. But I'm just going to have some coffee. It's worth looking at correlation here. So when we look at dollar products, what are the other dollar products doing? Is there scope to move higher or lower, depending on what product we're looking at? So what I'm trying to say is Aussie dollar is moving higher. That's on stronger Aussie, weaker DXY, but probably on weaker DXY, which is the US dollar. Let's look at dollar CAD and see what that's doing, because that's obviously another commodity based currency, and see whether or not we believe that can move further to the downside. Let's just get rid of some of these fibs. Okay, so choppy and corrective, impulsive, choppy and corrective, three wave pattern. Okay, 61.8% is here, 1.3819. Support is here, 1.3767. So what I'm seeing, if I can find it, there we go, is a Gartley pattern. Okay, so we're currently moving lower in BC, and then we're going to move back up in CD and complete the Gartley formation at 1.3846. Now there's two support levels, 1.3785 and 1.3767. Now you notice this one's green, and the resistance level on Aussie dollar, or Aussie against the US dollar, was green. Okay, so what I normally like to do, I like for these levels to go in sync. This is a weekly support, this is a daily support. So what I think is going to happen is we're going to move down here. When the US dollar against the Canadian dollar hits this support level, I believe that would then be a good level to short the Australian dollar against the US dollar. Okay, so, and then to target this 64.19. So buying pressure in, or selling pressure I should say, in the US dollar will push this up to a certain level and then push it down again as buyers re-emerge, and this will happen at the same time. So selling pressure at the moment in the US dollar, buyers re-emerge and take us higher. Now that then brings me on to the euro against the US dollar, a real mixed picture. If we look at the daily chart, we've got 6 days of different results. So a positive day, negative day, positive day, negative day. Very hard to trade on an intraday bias, and you can often end up with a crazy chart like this. Let's get the pivots off again. So what the hell is going on here? Well, there's three patterns. Okay, so my favoured pattern is actually to the downside. So bulls, or cipher pattern bulls, will probably be targeting this level, butterfly formation at 1.1888. That'll be a completion, then we move to the downside. However, I just said that we saw 6 days of mixed and volatile price action. That has formed this inside wedge pattern. So I'm just going to drop this off for a second so we don't confuse matters. So now we've got something that looks a little bit more understandable. Okay, previous swing high here. This is going to be black. Oh no, it's blue. That's okay. Let's put the pivots back on. Okay, so previous swing high at 1.1699. Remember, we're looking at the dollar moving to the downside at the moment, correcting lower. Okay, so that's forcing the euro against the US dollar higher. Previous swing highs often attract selling interest, or levels just above them attract selling interest, because that can obviously be a sweep for stop losses. this pattern gets negated on a move through 1.1730. So immediately you can start planning out a trade. Conservatively, it would be outside the wedge, because that's sort of giving you sort of a double resistance or double pattern. So conservatively, easy for me to say, that would give you a 3.76 R rate. If you wanted to say, well, if it breaches this pattern 117.30, and that increases your risk reward factor to 5.48. So bit of a mixed picture, but using the correlation of DXY and using the correlation with the Australian dollar against the US dollar, bias to break to the downside, dollar CAD bias to break higher, that should mean that we have limited upside pressure in the euro against the US dollar. So we've covered those. Dollar yen, don't even really know what to say about this pair at the moment. It's really just choppy, and you can see I've not got really much in the way of annotations here. Okay, so broke the ending wedge, measured move target was quickly achieved. What do I see? And there's a great book out there that's called Trade What You See. What do I see? 5-wave pattern to the downside. What should that mean? It should mean that the move higher is corrective, but it's been aggressive. My resistance level at 147.50 got busted yesterday. Can I see a pattern? Really had a great deal to do with this one this morning. Potentially. Okay, 61.8%. Remember, okay, so we've got 5 down. It should mean that the move higher is corrective. 61.8% is here at 146.87. I've got a support level just below that. 78.6% is this. So what we could see is just a move inside the range, okay, to complete the corrective formation and then move to the upside. So today we have resistance at 147.50, support at 146.81. And I think we'll finish off with cable, because that really has been sort of textbook analytical move. Okay, so expanding wedge pattern has a bias to break to the upside. Measured move target of 1.3789. Consecutive days of gains with a small correction at 161.8%. So again, going back to US 30, just look for that sort of inside day or doji style candle, just to highlight a correction. This has actually moved. Now 134.48 support. Limited upside, 136.38 will be a 261.8% extension level. Sterling is strong at the moment across the board. Okay, so when we're talking about correlation, obviously there's a correlation with DXY and dollar products, but there's also a correlation with other sterling products. I don't see any other sterling products wanting to turn. Okay, so really, do you want to be selling the 261.8% extension level only on a bit of news, only on other sterling products hitting substantial barriers? Otherwise, for me, it's a stand aside and let this sort of play out. 137.89 is the measured move target for the wedge, so at the moment, still bullish. Okay, guys, thank you for your time. It's been a pleasure. All the very best for your trading, and I'll be back again soon with more analysis. Many thanks.
Hola Prime, trade with transparency.